I'm Georgia Williams with the Investing News Network, and this is part 2 of our Adrian Day interview that took place at the New Orleans Investment Conference. Precious metals have performed well amid the unrest. Do you see this trend continuing into the new year?
Yeah, absolutely. New Year, that's only 2 months away, so that's a fairly short term. I said yes before I even thought we were talking 2 months. I definitely think that precious metals over the next year or two have a very, very low risk-reward, have a very good risk-reward profile. Mm-hmm. So that's how I approach it to begin with. What is the risk? What is the potential? And is the ratio good? Gold over the last, let's say over the last 3 months, after we had to run from May, has really held up very well. And even in the face of what would normally be, negative news for gold any particular day, like, the Chinese are coming to Washington, they're going to sign a trade deal, stock market goes up, gold only goes down a very little. And that's a very, very positive sign. When a market doesn't go down on bad news, that's bad news for gold, which is good news for everyone else. But when a market doesn't go down on bad news, it's a sign of a strong market. And I think gold is acting very, very well in that regard. Obviously, if the Fed doesn't cut rates at their next meeting in December, that would, all other things being equal, that would be negative for gold. But when that came out the other day, gold took a bit of a hit, but it wasn't really that bad. And it comes back very quickly. So I think there's a lot of pent-up demand on the sidelines for gold, and that's the key to me. There's a lot of people that are waiting for a pullback or a correction before they buy gold. And I think gold is well supported here.
What could impact the trajectory of the sector? I know you just touched on that a little bit, but some other things perhaps.
Well, there's all the obvious ones. I mean, interest rates are obviously one. If the U.S. next, in the beginning of next year starts cutting rates again, that'll be positive for gold. I do think, you don't have to. This is totally independent of any view one might have on President Trump. But if Elizabeth Warren, for example, becomes a front runner, that is going to be positive for gold. A drop in the dollar will obviously be positive for gold, but one has to ask what is going to cause a drop in the dollar. Right. Because for the dollar to go down, something else has to go up. And the big question is, what other currencies could go up? I think a lot of the resource-oriented currencies, particularly the Canadian dollar, I think the Canadian dollar is very undervalued here. You get a reasonable Brexit through, and the pound should correct upwards, so the pound could correct upwards. But the pound and the Canadian dollars are, I won't say second-tier currencies, but they're not the really big ones that count, which are the euro, the Japanese yen, and the Chinese renminbi. The Chinese renminbi will probably go up on a trade deal, even if it's forced up by the Chinese, as a quid pro quo for the trade deal. The Japanese yen is reasonably strong, but I don't see it getting much stronger. But the euro, it's really difficult to think of what is going to make the euro go up in the near term. And so, it looks to me as though the US dollar is going to remain relatively strong for the foreseeable future. But that's been true for the last year, and gold has gone up well. Right. So I don't think we need a lower dollar for gold to go up. It would just help. Right. And then, of course, there's political things. We don't need, geopolitical things that could happen any day, any time.
Now, given the right market conditions, which are often things that, are doom and gloom for the rest of the world, how high could gold possibly go?
Yeah, we didn't ask me a time frame, did you?
Okay. Within the next 5 years.
Oh, no, well, you see, was it P.T. Barnum? Who was it who said, when you predict, never predict price and a time? Only predict one or the other. Who said that? It wasn't P.T. Barnum. Someone said it.
Something he might say.
And it's very good advice. I don't really look at it that way. Okay. And I'm not avoiding the question. I'll answer the question, but I don't look at it that way. In my investing, well, first of all, in my sort of philosophical utterances, I think of how low will a dollar go rather than how high will gold go.
Okay.
And I think that's an interesting way to look at it. I mean, when you think of what happened to what's his name? Grant Williams.
Okay.
In his speech, he made a really good point when Roosevelt revalued gold, raised the price of gold from $20.67 or whatever to 34 and whatever. It wasn't really a revaluation of gold, it was a devaluation of the dollar. That's what it was. Anyway, so that's that. In my investing, I don't look at what's the price target, how high do I think it'll go, and when will it go it. I look at what's the risk, what's the reward. Does this thing, whatever it is, an asset like gold or an individual stock, does it have a high risk to the best of my ability to judge? Does it have a high potential? What is the possibility of that risk? What is the possibility of that reward? And is it a good risk reward? The secondary thing I say is, can I tolerate the risk? Even if it's a good risk reward, can I tolerate the risk of being wrong? I mean, obviously, if you have 52 playing cards and you tell me you pick the right one and I'll give you $1 million, but you pick the wrong one and you give me 20, well, the odds are pretty darn good. Probability is good, but I'm not sure I really want to take that risk, if that makes sense.
Yes.
So with gold, I look at it as a risk-reward, and I think the risk-reward for gold is very, very positive right now, because for gold to go down meaningfully on an extended basis means that the world suddenly has to find sense. We have to start reducing debt, balancing our budgets, geopolitical issues have to go away, we have to have Britain leave Europe in a nice Brexit. We have to have North Korea say, I'm not going to explode any more missiles. We have to have a Chinese-US trade deal. There's so many things that have to happen, politically, economically, that aren't going to happen. And so I think the risk, the downside is very limited, and at the same time the upside is quite good. Primarily, I'm a bull on gold right now for monetary reasons.
Right.
Because we've just created too much money. We've created too much money in the last 10 years. And all of that money, certainly in the US, all of the money that was created is with the big banks. And at some point, that money is going to come off deposit with the Fed and is going to be lent into the real economy, at which point we start to see inflation. Because the money hasn't gone away, the money's still there, it's just not in the real economy right now.
Right.
And so, when we start seeing inflation pick up dramatically, that's going to be very positive for gold.
Okay. So no number.
Oh, a number, you want a number. I don't know. I mean, I do think the trends in motion, the things that are inevitable often take longer to happen and you think they're going to take, but once they start, they can unravel very quickly. And when I say that with relation to gold, I'm thinking primarily of a decline in the dollar. We've talked for years and years and years, by we, I mean everyone's talked for years and years and years about how, China has too many dollars and they're going to start diversifying their dollars and watch out when it happens. And, you look around the world and over 50% of central bank reserves are held in the dollar. Okay, and slowly that's beginning to happen. Russia is the only seller so far, other than some of the Mideast countries. Russia is the only major seller of dollars so far. China's not a seller, but they've stopped buying as many as they used to buy. And the same goes for some of the European countries. They're not buying as much as they used to buy. Well, before you sell, you have to stop buying. So I think this is a sort of prelude. And it could be that will unravel very, very quickly. Because everybody knows, everybody who holds dollars knows we can't sell our dollars because we'll push the dollar down. So everybody's saying, let's keep our dollars and keep it going. But it only takes one major holder, and it could be China or it could be Japan, to say, let's dump our dollars. We don't want them. Let's sell them and aggressively sell them. And when one country starts to sell, suddenly they'll all start selling. And then gold could go to, 5,000 pretty quickly.
5,000. It is a number.
Don't say Adrian Day predicts 5,000 gold.
I won't. There's a lot of conditions that need to happen first.
No, but these things can happen very quickly once they start. And a parallel I think of also relates to gold. The parallel I think of is in 1971. Throughout the 1960s, from 1933 to 1971, the US said that any foreigner can redeem gold at $42 an ounce. Right, and then it went to 35. So let's just say 35 to make the story easier. Okay. Any foreigner can redeem gold at 35. That's what we think gold is worth. That's what we tell them it's worth. US people can't. It's illegal for them to own gold. You cannot own gold, you nasty people. But if a foreigner has gold, buy it. Yeah, give us $35, you can have your gold. Well, what happened in the 60s was they called it the London Pool Agreement, where people saw the dangers here, but nobody was acting on it. And so, they just had agreements not to do it kind of thing. In 1969, 1970 rather, Charles de Gaulle of France said, give us that gold for $35. Right? And they demanded their gold back. And suddenly, every other little country in the world started demanding their gold back. And that's when Nixon closed the gold window. Said you can't exchange gold for dollars. You can't exchange dollars for gold anymore. So these things happened very, very quickly. Everybody saw the danger for 25 years. Everybody saw the danger. But until one man, one rather idiosyncratic man, but one man said, hey, give us that gold, and the whole thing unraveled. Right. So the same thing with dollar reserves. If this thing with Trump goes on long enough, the Chinese don't act this way, so China's not the best example. But, who knows what could happen, The way it's going right now, U.S. could pick a fight with Switzerland or someone.
Or Canada.
Yeah, or Canada even. And a country says, hey, it could be France, it could be Germany, we're dumping all our treasuries, Yeah. I mean, think of the problems in the SWIFT system, the international bank transfer system, which is a U.S. institution. So technically, when a French bank makes a loan to a German company, the money goes through the SWIFT system. Right. So technically, it's held in a U.S. banking system. And so the U.S. says, well, those two companies are subject to U.S. laws, which is preposterous, which is arrogant, and so people don't like that. Right. The Chinese don't like it, the Middle East people don't like it, the Russians don't like it, and Malaysians don't like it, and the Western Europeans don't like it. And, a lot of people have said we don't like it, and Malaysia started a gold thing, but who's going to, with all due respect to Malaysia, it just doesn't have the weight. But when France, Germany, and Belgium say, wait a minute, we don't like this, we're going to set up our own alternative international payment system, that is really significant. Now, I can easily see something happen politically where France or Germany or Holland or someone says, hey, we're selling all our treasuries, we're fed up with you. Yeah. And then it starts to snowball. So it could happen quickly. Right. That was a long answer to a short question.
I appreciate all of the truth and honesty in it. Now, for an investor who's looking to get involved in the sector, what's your piece of advice?
I think the biggest piece of advice, two pieces of advice. Three. One is understand what you're looking for from gold. Are you looking purely for insurance on the currency collapsing and the world going to hell in a handbasket? If so, you buy bullion and that's it. And you keep it at 10% and that's it. Are you looking to a hedge on the rest of your portfolio? Maybe you buy some of the mining stocks, senior mining stocks. If you're looking to maximize your returns, then you're buying individual stocks and trying to trade them and everything else. But it's a totally different mentality. Don't buy gold for insurance and then buy, Ajax exploration. I hope there isn't an Ajax expiration.
Well,
But
there might be.
but you understand what I mean.
Yes.
What I mean. So that's number one. So understand why you're buying gold and fit your investments and your trading. Frankly, if you're buying insurance, then it doesn't matter if gold goes down $25 or up. You don't sell your house insurance because the insurance price went down. So that's number one. Number two is I have no problem with people putting 30, 40, 50, 60, 70% of their assets into gold if they want to. But don't put more than you're comfortable with. That's critical. And don't invest more than you can afford. Always have a cushion. Always have a cushion. Because inevitably, you will need to take money out of your account at the worst possible moment. It never, never, never happens that you have a catastrophe and need money urgently and everything you own is up. It doesn't happen. So always have a cushion so that you can take cash out of a bank for emergencies and don't have to sell your stocks at the worst possible moment. And I said 3, didn't I? Yeah, 3. And this is perhaps on an investment point the most important one. Know what you're investing in. So if you're going to sit at a computer, an hour every day after dinner, looking at the stocks, you're going to read the reports and everything else, fine. But if you're not going to do that, don't act and invest as though you were doing it. So maybe for most people who want to get involved in gold, maybe they go buy gold bullion, and maybe they buy Franco-Nevada, which is a great company, very well diversified, great balance sheet. It's got revenue from 39 different mines, so you're getting good diversification. 22 different mine operators, some of the best mining operators in the world, so you're getting good diversification, and you leave it at that. If you're going to buy Ajax Exploration, then you better darn well do your homework on Ajax and follow it. That's my...
I appreciate all of your time, Adrian, and as always, you're a wealth of information.
Well, thank you.
Thank you very much for speaking with me.
Well, thank you very much for having me.
Anytime. I'm Georgia Williams with the Investing News Network.
I can't.